Hello, welcome to Save U.S. Taxes Legally. I have to apologize. I had some people doing things, so I'm just going to do a clean thing. I'm going to ask you three simple questions, and you're going to say yes or no into the chat. Number one, do you want to save U.S. taxes year after year, generations after generations? In the chat, please put yes or no. Second question, do you want all lawsuits to become frivolous and go away? I can't stop you from being sued, but think about how much time, anxiety, and worry just disappears. Again, put yes in the chat or put no in the chat. And question number three, um, nobody will know your information. Unfortunately, 40% of LLCs, S Corps, and C Corps get sued every year. I started off as a real estate investor. When I started the trust, I had 6 LLCs and never knew that statistic. I Googled it. So again, this is on the federal level, and we highly suggest you close all LLCs, S Corps, and C Corps. Please put yes or no into the chat. I'm going to share my screen. So the Spendthrift Trust comes from England way back in 1853 when King Henry VIII started the Church of England. Yes, that famous king who chopped off his wives' heads. He went to go tax the lords and ladies of England, and they went back to the Magna Carta in the 12th century. It's contract law that came to the colonies while we were still part of England. The law firm I work on behalf of inherited a trust that turned 350 years old in 2023. Well, it's February 2026, so it's now 353 years old. This is in the IRS Tax Code 643B. Our current tax code went into effect February of 1913, and the super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys, made sure they could save taxes. I know we're in 2026, but I want to show what they did quietly on January 1st of 2025. There's 4 ways to file your taxes. Single is the most expensive way. Then there's head of household. You're a single parent with children 18 or younger in the household. Then there's married filing separately. And then the cheapest way is married filing jointly. Quietly, on January 1st of 2025, check out what they did to married filing separately. They made it match a single filings all the way up to 35% tax bracket. If you get nothing else from this presentation, please, if you're married, file jointly. Just at 32% tax bracket, check this out. At filing separately would be $197, $601. If you're filing married jointly, you would save $394. Now this is 2026 tax bracket. I sold 3 trusts in October of 2025, and I went back to redo their taxes for 2026 because President Trump's big beautiful bill went into effect. The largest savings that my 3 clients was $242 for the full year. You divide that by 12 months, it's not a huge amount of savings, but they're saving a little bit in taxes. Now, if you're making at least $100,000 gross per year in 2026, you will save 5 figures in taxes. If you make more than $100,000 gross in taxes, you'll save even more. So single or married filing separately, you save $15,040. Head of household, you save $13,410. And married filing jointly saves $15,040. Now, this is a presentation I did in Arizona. Their state income taxes are 2.5%. So if you're married, single or married, filing separately, you would save $15,416. Head of household, $13,740. Now, if you make $200,000 in taxes, your savings go up. Single or married filing separately would be $36,588. Head of household would be $34,498. Or married filing jointly would save $30,091 every single year. This is for $200,000 here in North Carolina. Our state income taxes is 4.25%. So married filing separately or single, they would save $38,090 per year. Head of household would save $35,964 per year. And married filing jointly would save $31,359 per year. Year after year, generation after generation, you're leaving a legacy. Now, most CPAs and financial advisors will tell you, ooh, the IRS doesn't like this. They wrote a memo on August 9th of 2023 where the IRS specifically said they do not like tax code 643B and they do not like the irrevocable complex discretionary non-grantor spendthrift trusts. Well, it's their opinion. The IRS cannot change the tax code. Only Congress can change that. Too many presidents, too many senators, and too many congresspeople have the Spendthrift Trust. Now, these 5 elements are super important for the Spendthrift Trust. Every Spendthrift Trust needs to have this. Irrevocable means it goes from generation to generation to generation. 97% of the trusts sold in the United States are what my mom and dad had, or what Susie Orman talks about on PBS television. The family trust or the living trust. That's a revocable trust that when both my parents pass away, that trust dissolved and all the assets had to be split up. This is not your mom and dad's trust. Complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, generation to generation, century to century. Whoever is the trustee or trustees can make the rules for all the beneficiaries. Discretionary. Whoever is the trustee or trustees can make the rules for the beneficiaries. One of my clients, a husband and wife with 4 apartment buildings in Los Angeles, are letting their adult daughter live in one of the apartments, but she has to take 4 random drug tests per month to stay there. She actually took her mom and dad to federal court to sue them. The judge read over the trust, and he told her she has 2 options. Option 1, move out, pay her own rent. Option 2, pass the drug tests and stay rent-free. But whatever her parents were making her do, they had the right to do that. The 4th element, non-grantor, makes this trust completely private. When you start the Spendthrift Trust, you're going to have someone who will never be a beneficiary and who will never be a trustee sign up to be the grantor or the settlor. Then they sign themselves away, and it's a very easy thing to do. And then the 5th element, spendthrift. This has been in front of the United States Supreme Court on 2 separate occasions, and both times it's won. It's an amazing thing. Now, the law firm I work on behalf of is called the Benson Financial Trust. Paul Benson was a Harvard Law professor who wrote 5 separate trusts to save taxes. In 78 years, not a single trust has ever been audited. Now his grandson and great-grandson run the law firm. When you start a spendthrift trust, they will give you a certification that says if you get questioned by the IRS, they will defend you free of charge. In 78 years, it's happened one time only. A senior IRS agent went down to Texas, where the law firm's located, spent 5 hours in the boardroom, approved the trust, and 2 weeks later, he sent an unsolicited letter called the Myers letter back to the law firm. If you need a copy of that, please put your email into the chat. Now, with the 5 different spendthrift trusts we're going to talk about, the business trust is for anyone making 1099 income. Unfortunately, I cannot help W-2 income earners. If you're making at least $100,000 gross as a business owner, as an entrepreneur, a franchisee owner, or a salesman, or anything, you will save 5 figures in taxes. The beneficial trust is for all investors. You will stop paying capital gains when you sell something at a profit. You will no longer pay interest income taxes if you're a passive investor. You will no longer pay dividend income taxes if you're a stock market. You'll no longer pay rental income taxes if you're a real estate investor, and you'll stop paying royalty income taxes if you have talent or if you have NFTs. This is an actual client of mine. He called me on January 3rd of 2025. He's 29 years old. He's single. He was in Army for several years, and now he works for a defense contractor and being paid 1099 income. He was driving a 10-year-old car and lived in an apartment with 2 roommates. He had nothing to show for it. So he was planning on making more than $150,000 in 2025, but we just used $150,000 that he made in 2024 as a base. At 90% filing single, he would save $25,962. And on top of that, Virginia state income taxes at 5.75% is an additional $8,626. For the full year of 2025, he got to save $34,587. If he made more than that in 2025, he would save even more taxes, year after year, generations after generations. Now, my personal story is I became a real estate investor in 2018 when my mom got sick 2,000 miles from home. We all were going to, I was living in Phoenix. My parents lived in Goodyear, Arizona, and they drove from Goodyear to Charlotte for the wedding. My dad calls me Thursday before the wedding to say my mom is in the emergency room. They're not sure what's wrong and not to change my ticket. I'm working as a Medicare broker. The wedding was October 27th. If anyone knows anything about Medicare, open enrollments from October 7th to December 5th. I had the time saved up, but I was denied vacation time because it's open enrollment. I did a red eye Friday night. I landed at 7:20 Saturday morning. The wedding's at 3 o'clock. The groom, his younger brother, and my dad were at the airport to meet me. We went out to IHOP for breakfast. The two boys went back to the house. My dad takes me to the hospital to see my mom. I walked in on the priest giving my mom last rites. It was a surreal day. I didn't know she was that sick. And at 3 o'clock in the afternoon, I go to this fantastic wedding. Then to a country club, ate too much, danced too much, drank too much. The next day, my sister-in-law puts on a beautiful buffet. My dad taps me on the shoulder at 12:30 saying, let's go see your mom, and then I'll drop you off. So I purposely bought this bank-owned mortgage in 2020 for $20,000. When I became a real estate investor in 2018, I started working with a mentor who was doing bank-owned properties. They call it tape. It's actually an Excel spreadsheet. In 2019, I wholesaled 7 bank-owned properties nationwide, paid off all my debt, completely debt-free. Woohoo! I'm a rock star in my real estate group, and I have $50,000 in my bank account. Well, COVID struck. Everything shut down because we had to use courthouses. On April 1st, 2020, my 3 properties did not pay me, so I had no money coming in because I quit my Medicare job because I hated it. And on April 4th of 2020, my CPA called to congratulate me. He actually congratulated me, saying I made so much money in 2019, my tax bracket went from 22% to 24%, and I personally owed $94,000 in short-term capital gains. I cried myself to sleep that night. A fantastic book to read is The Power of Your Subconscious Mind by Joseph Murphy. I woke up on April 5th, 2020, knowing I was going to take a HELOC off my paid off house. And then I also had read an article about the Rockefellers Spendthrift Trust. It's called The Office. It took me 5 months to research this. So when I bought this house in Rocky Mount, North Carolina, so I could write off visiting my mom in North Carolina, I paid $20,000 for the contract. It was going to go to auction for $50,000. At 24% tax rate, that $30,000 spread without lifting a hammer would cost me $7,140. When it finally went to auction on August 28th of 2021, the final bid was $64,326. Woo-hoo! The way I like to do real estate. But I also got to save $10,368 on this one property and put it into more real estate. The Beneficial Trust is going to save you capital gains. Short-term capital gains affect you when you sell crypto, you're an options trader, you're a forex investor, you wholesale, you fix and flip, auction houses, or tax liens. Long-term capital gains will be shown on the next slide, which is a year or more. Interest income taxes are for people who are passive income, mutual funds, you're in a REIT, you're doing subject to real estate. The BRRRR strategy, I personally have notes. I have 12 notes where I'm the paper in the house. I'm the Bank of Sally. People pay me their mortgage. Creative financing, seller financing, or forex investing. Yes, forex investors, you get taxed double, capital gains and interest income taxes. Dividend income taxes. If you're in the stock market, you're a day trader, you're a futures trader, a commodities trader, or living off of dividends, you're being taxed 10% to 37%. Rental income taxes. I don't care if you have short-term rentals like Airbnb or vacation rentals, 5 doors, 10 doors, 20 doors, 100 doors. Maybe you're multifamily or apartment buildings. You have commercial property or you're doing Airbnb arbitrage. Yes, you can move a property with cost averaging into the trust. Yes, you can move a property with depreciation into the trust. Each property you buy after that, you don't have to worry about that anymore. The one that's not on here is royalty income taxes. They're taxed a little bit less, 7 different layers, but between 10% to 35%, and affect you if you have talent or if you have NFTs. Now, long-term capital gains are either 15 or 20%. This was as a son saw my TikTok video over Christmas, and he knew his mom and dad were selling a 42-year-old restaurant March 30th of 2023. The father, Alan, had never been on Zoom, so we had a conversation. He asked me to call his business broker to tell them we were going to change the contract. His business broker, Sam, it's like he's going to save either $450,000 or $600,000, depending on how much he pays in capital gains. I'm like, yes, he will. Sam's like, well, what about the business trust? And I said, you save 90% on federal income taxes and no longer pay state income taxes. Sam's like, I'm going to make $30,000 on this deal, and I have 4 more in the hopper. I'm like, fantastic. He buys the business trust. I tell Sam about my free affiliate program. He tells Michael, who's buying the family restaurant for $3 million, it's his 7th restaurant in 3 different states, and about how much he could be saving in taxes. Michael bought the business trust, and Sam made an extra $1,000. That's a win, 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 win for everybody. Now, one thing the trust will also stop from happening is they say 3.5 million seniors get charged extra for IRMA, income-related adjustable amount. Every October, the IRS goes back 2 years. So October 2025, they checked all 1040 tax returns from 2023. They add everything together, how much you gain from Social Security, how much you gain from pensions, if you're working, if you're doing a 401k withdrawal or a SEP withdrawal, if you make capital gains, interest income taxes, dividend income taxes, rental income taxes, or royalty income taxes, gets all added together. Now this is 2025 because they haven't done 2026 yet. So I just did a quote for a gentleman today where he's making $700,000 a year married. So he's going to save over $480 per month because he's starting the Business Spendthrift Trust. Again, IRMA affects Part B and Part D of Medicare. Part B are your doctor visits, your tests. Part D are your prescriptions tests. He still will have to pay the $185 per month for Part A's and B, and then whatever his prescription cost is. I don't know if he's the supplement plan or an advantage plan. We didn't have that conversation. Now, if you want to reach out to me, my free to set up a 30-minute tax breakthrough session with me, it's going to be www.thetrustisyou.com/scheduling. I have a free class on the Great Discovery, but my first name and my last name squished together. You're going to get a presentation sort of like this, 3 articles from Forbes magazine that I did not write, 2 pages of case law that you can research this to your heart's content, and the presentation on the Great Discovery you can translate into 165 different languages. Now, my whole goal is to teach as many U.S. investors, U.S. Business owners, U.S. entrepreneurs, U.S. franchise owners, and also 1099 income earners how they can save taxes legally. Thank you for watching my video. I hope you learned something new. Have a beautiful week.